Good afternoon, everybody. This is Antoine Smalls Financial Blueprint. I appreciate you guys continuing to tap in with the channel. It is Wednesday. We're doing a stock market live as we do every week. This week we're doing it on Wednesday due to some travels that we got going on this weekend. I'm taking my son down to Orlando, Florida. So we're going to go into the stock market today. All right. So we got Bitcoin. We're going to talk about Bitcoin. We're going to talk about AI stocks. We got a new AI play that we need to discuss as infrastructure for artificial intelligence becomes a hot topic over the next 3 to 5 years. And then we're going to talk about Netflix, right? And we're going to take a deep dive into Netflix as we review the company and how significant the company of Netflix is in the market and if it's a good investment or not, right? So we got a lot to go over today. We got a packed show, a lot to discuss. So let's go right into our first topic, which is crypto, Bitcoin. And if Bitcoin is a good investment and if you should be continuing to invest into Bitcoin. So let's go into Bitcoin currently right now and let's talk about it.
Executive Chairman Michael, it's great to speak with you.
Yeah, thanks for having me, Morgan.
Okay, there's a lot to get to, but first I do want to start with the fact that there are reports that you were in Washington last week meeting with policymakers about this strategic Bitcoin reserve bill. How are you advising lawmakers right now, and why is the case there to create a strategic reserve?
Well, I think Bitcoin's good for the nation, and the country would benefit. We did buy something like 78% of the entire United States for about $40 million over the past 100 years or so. So I think the United States ought to own a large part of cyberspace, and Bitcoin is the next frontier.
What does it do to prices, especially as they've been chopping sideways, even coming off a little bit recently?
I think the real story in Bitcoin right now is corporate adoption. We've got a consistent acquisition of Bitcoin by the big ETFs like BlackRock, and that's taking up all the natural supply, and they're doing that on behalf of institutional investors. But these 180 companies that are capitalizing on Bitcoin are buying even more than the natural supply being created by the miners, and they're putting upward pressure on the price. And I think that as we work through the resistance of late and some macro headwinds, we'll actually see Bitcoin start to move up smartly again toward the end of the year.
At the beginning of this year, you and I in January sat down, had an hour-plus conversation at the ICR conference about this very idea, Bitcoin treasury, what you were doing at Strategy, and where it made sense for others to potentially adopt a similar concept as well. What are the types of companies that you're seeing lean into this? And at what point do you think it starts to accelerate if it does?
Well, I think you've got two types of companies. You've got operating companies that would otherwise be returning their capital via dividends and buybacks, or they would just be holding low yielding money markets. And they're choosing Bitcoin as a treasury reserve asset. So that actually improves their capital structure. It strengthens those companies. There's a lot of those. And then there's a second sort of company, the true treasury companies. They're capitalizing on Bitcoin. Bitcoin is digital gold. The world ran on gold-backed credit for 300 years. The world's going to run on digital gold-backed credit for the next 300 years. So treasury companies, in essence, are holding digital capital and creating digital credit instruments on top of that digital capital. And there's, of course, a huge demand for equity and credit instruments in traditional capital markets. And Bitcoin is emerging as the ideal form of digital capital to back those instruments.
Yeah, and I want to dig into that a little deeper here, Michael. But first, I mean, gold's having a huge run right now, too. It's at $3,800 an ounce. It's basically trading at record after record this year. But Bitcoin hasn't sort of moved lockstep. So how to think about that analogy in this environment?
JP Morgan said gold is money, everything else is credit. This morning I said Bitcoin is money, everything else is credit. The success of gold is indicative of the demand of mainstream investors to have a bearer instrument that's a long-term store of value, that's not a currency derivative and doesn't have counterparty risk to a corporation. Gold fits that bill. Bitcoin fits that bill even better, and it's sort of got the digital upside. You can't teleport gold, and you can't program gold to vibrate at 1,000,000 times a second on a computer. So Bitcoin is the technology version of gold. It's digital gold. It's going to be, in my opinion, 10x bigger than gold, but they're the same idea.
It's important that we understand this asset class because for a long time this was not seen as an asset class. It was labeled as a risk and a hedge, and it's still currently looked at as a partial hedge to the overall market and the overall U.S. dollar long term. But Bitcoin has now been adopted by a ton of big hedge funds. He spoke to BlackRock and Vanguard and different um, big $1 trillion players that are now putting money towards Bitcoin as well as Ethereum. And we've seen XRP being discussed also from the presidential standpoint. So the United States as a whole is trying to create Bitcoin being a crypto powerhouse in the future, right, from the president's standpoint. So all in all, it's important for us to look at Bitcoin and invest in it, right? So don't get left behind with your speculations when it comes to crypto. Bitcoin is obviously something that is going to be here for a very long time, and if you have children, it's going to be a part of your children's lives for sure. Currently, right now, Bitcoin is sitting at $113,000 right now and 690 cents. Bitcoin got as high as $124,500 approximately in the early August timeframe, right? So, is Bitcoin a good investment right now? I say yes. If it gets under that 110, I would buy, as much as you possibly can. But right now it's at 113. I would buy that 113, right? So dollar cost average in the Bitcoin. We're going to continue into the Bitcoin conversation, but that's the current price right now. 113, $704.72 is the current price in Bitcoin. All right. So let's go into our second video where we get a little bit more of a deep dive into the crypto and the Bitcoin side of things as we continue to move forward in the Bitcoin space.
$1,000 level as investors analyze risks in the broader market. Jamie Dimon weighs in on use cases around stablecoins. And Santiago Roel Santos of Inversion discusses what he expects from crypto in the fourth quarter. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets mostly holding steady this morning. As of noon Eastern, Bitcoin was little changed, hovering just under $113,000. Ether rose 0.3% to 41.83. Meanwhile, the Trump family-backed World Liberty Financial token fell more than 5% after co-founder Zach Folkman reportedly said during a speech at Korea Blockchain Week in Seoul that the DeFi platform plans to launch its own debit card. Okay, let's talk about the top stories. Publicly traded design company turned Solana treasury, Forward Industries, plans to tokenize shares of its stock. Yesterday, it announced its partnership with fintech firm Superstate, allowing investors to tokenize its share on the Solana blockchain. The announcement also mentions Forward's plan to take equity in Superstate as part of the agreement. This follows the company securing more than a $1.5 billion commitment earlier this month for a Solana treasury. As of noon, shares of the company jumped by around 12%. Next, JP Morgan Chase CEO Jamie Dimon sat down with CNBC TV 18 at the JP Morgan India Conference 2025. And among the things he discussed was crypto. When speaking on stablecoins, Dimon said he's not particularly worried about them competing with banks and sees some use cases for the technology. He also said banks are exploring whether they should have a consortium as they look to get involved. This comes as TradFi firms look to get more involved with blockchain technology after the passage of the Genius Act this summer. During an earnings call earlier this year, Dimon, who's been a skeptic of crypto, acknowledged JP Morgan would be involved in the stablecoin space. All right, let's turn to crypto markets for our main story. I spoke with Santiago Roel Santos, founder and CEO of the crypto firm Inversion, about where prices are headed as we approach the final quarter of 2025. So let's start with the broader markets. Major cryptocurrencies have settled a bit this morning after a sharp pullback yesterday. What do you make of that drawdown? Is it a reaction to politics and a looming government shutdown? Is this still part of sort of the historical summer doldrums that we see in the season? What's your take?
Yeah, look, I mean, we just had a rate cut, and I think Bitcoin has had a phenomenal year, and I think the market is cooling down a little bit. I think if you look at futures, I think traders are bracing for continued volatility throughout the end of the year, and I think this is just normal. I wouldn't read too much into it. This is a volatile asset class.
I mean, and to that point, I mean, I'm thinking about sort of what are the biggest drivers of prices right now, overall, especially, right? So for a while, I mean, we've been talking about regulation. That was very much a driving factor. Do you think that that's still at play here, or do you think sort of the macroeconomic headwinds and tailwinds are what are driving prices as we sort of look forward?
I think it's very much the latter. I think Bitcoin has entered into and is much more mature of an asset now. It is a global macro asset. You see more companies put it on the balance sheet, pension funds, RIAs. It's become easier for people to have exposure to Bitcoin. And I think it's a direct correlation to rates and the overall macro picture. And I think as Bitcoin has matured, we can expect it to continue to be sensitive to macro shocks and the broader economy. I think it's very normal, very much the latter.
But then you still obviously have investors wanting to monitor and see where things go by way of regulation, right? We obviously have a much more friendly administration in the White House towards the crypto market now. Are there still some regulatory headwinds? Are there still some tailwinds that investors should be focusing on, that you're personally focusing on when it comes to figuring out where prices might go from here?
Absolutely. Look, the reality is we had a total 180 on the regulatory environment last November, and we have finally an administration that wants to regulate it. You have the Genius Act, you have David Sachs at the helm. So there's a broader, very concerted effort across agencies to continue to regulate this industry. And so I think as we look ahead, there's going to be tokenization of stocks and stablecoin regulation. And I think that bodes extremely well for the industry. If you were to look back over the last 9 months, there's sort of this unlock of friction and release of this anxiety in the market. And finally, you're seeing a lot of large institutions and companies want to get exposure because they've been doing their homework for the last couple of years. And finally, they can have exposure to the asset class, and that's very positive, and that will continue to be a major tailwind for the industry.
I totally agree. I think that there was a change in corporate sentiment over the last 6, 9 months, 12 months when it comes to crypto and Bitcoin specifically, right? If it was about 2 years ago, saying that you want to invest in crypto and the corporate side of things, just 12 months ago would have been, probably not great for your job, right? But nowadays, right, everybody and their mama, including banks, right? JP Morgan talked about how, the company is going to get into the crypto stablecoin space, as well as you've seen Vanguard, BlackRock big companies, hedge funds, and equity investors, all getting into buying Bitcoin. So, the time that we were in the past where crypto and Bitcoin specifically was, labeled as very volatile, and it's still volatile, but it wasn't a, popular space. Nowadays, it's definitely changing. So if you are someone that's currently looking to, add to your portfolio, I would recommend you adding crypto, and specifically Bitcoin, Ethereum, and then you can stretch a little bit, but I would say Bitcoin is definitely the number one player in the crypto space for sure. And you have Ethereum, and you have other places like Solana and XRP, and you can go down a list, Cardano, and then a lot of other Tether and different investments that you can make. But specifically Bitcoin, definitely invest in Bitcoin. I would say take 5 to 10% of your portfolio and put that into crypto, and specifically into Bitcoin, and allow that to then, grow. Again, it's always long-term thought process. It's a 5, 10, 20-year investment vehicle. If you have children, I mean, investing in Bitcoin right now for your kids would be significantly important for them and their long-term investment future also, right? So as we transition from crypto, we're going to move into the stock market, specifically the trajectory of stocks currently right now in this new climate after the Fed then lowered interest rates. And then we're going to move into artificial intelligence. So let's go into the current stock market. And if you don't remember, the Fed, they cut interest rates last week, 25 basis points. And now we're going to discuss where we are currently now and the trajectory of the movements following the Fed cut.
We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
That was Fed Chair Jay Powell at a local Chamber of Commerce event near Providence, Rhode Island yesterday. Joining us right now to talk about it is Anastasia Amorosa. She is Chief Investment Strategist of Private Wealth at Partners Group. And Anastasia, if you look at what was happening here, markets did pull back, but you're talking about the major indexes being at all-time highs before that. I don't know if there's too much that we should read into it.
No, I don't think so. I mean, I think Fed Chair Powell was stating the obvious, which is, yes, we do have somewhat stretched valuations. And yes, the markets did rally 47% in the case of the NASDAQ since the April lows. I think most people know that. Most people also know that he's most focused now on the labor market. And what I found actually quite supportive is that he once again referred us back to the market pricing, and the market's pricing is looking for an additional 2 rate cuts into the end of the year. So I would say that's the most constructive narrative that really should support the market. Now, having said that, near term, are we a little bit stretched? Are we a little bit over our skis? Yes, probably so. And I would suspect something near term does cause a bump in the road. Maybe it's more, a weaker than expected labor report. Maybe it's the fact that the bar is actually set quite high for the earnings season. So probably we hit some sort of a, bump in the road, but I still think the direction of travel is higher for the market.
Yeah, it did remind me a little bit of irrational exuberance, but the markets continued to climb for a long time after that irrational exuberance comment. I guess one question is the strength of the AI trade.
Yeah.
You think it's alive and well?
I do think so. Absolutely. I mean, look, we've certainly invested a lot in artificial intelligence over the last few years, but I do think it is still early innings. And I say this for a couple of reasons. First of all, the AI CapEx, I think what's really telling is that it's not only the hyperscalers, the US ones, that are embarking on this massive AI CapEx, but it's also OpenAI that's also now building AI data centers. It's also the Baba news that we got this morning. That's the first thing I would say. The second thing I would say, if you look at the overall total addressable market for AI, it is about $450 billion today, but it is expected to double in the next few years. And that means infrastructure that needs to be built out. It means that the business application software that needs to be built out. So for us at Partners Group, AI continues to be a huge focus, I would say, from 2 perspectives. First, investing in companies that are the cutting edge of AI. They're delivering AI-powered services, for example, business application software. But on the other side, we're also very focused on infusing AI into some of our portfolio companies. And we do see this as about $100 million EBITDA opportunity, or about $1.5 billion in terms of enterprise value creation. So I do think that the trade is alive and well, and we are actually seeing tangible benefits from using AI in our portfolio companies.
This is key right here. It's not just the understanding of artificial intelligence, but understanding the whole build out of the sectors within artificial intelligence, right? You don't just have semiconductors, you have platform, you have manufacturing, you have energy and infrastructure, in which we're really going to transition ourselves from companies like NVIDIA, in which, what I'm saying transition, I'm not saying that we're going to stop investing. We're definitely investing in the NVIDIAs, the TSMs, right? The Oracles and things like that. And actually, we're going to talk Oracle in a second. But we're going to also start taking a look at data center build outs and how, what is the infrastructure and the power grid? What is the energy? What is the cooling that needs to happen within the data center and the AI infrastructure build out, right? What companies are going to then benefit over the next 2, 3, 4, 5, 10 years in providing the energy and providing the cooling to data centers, because it's not just about AI from a semiconductor standpoint. It's also about the infrastructure and the build out and energy around that, right? So once we understand these things, then we can then go and do our research and see who's doing business with NVIDIA, who's doing business with Oracle, who's doing business with, TSM and some of these partnerships, and what companies are going to then benefit from the greatness of artificial intelligence, right? So the conversation that we're going to have on this channel is going to move a little bit over today, because we're going to talk about infrastructure and energy in a second. But it's important that we take a moment and understand what she's saying, because then that then affects how we move and how we invest moving forward.
Are there any parameters or any kind of characteristics that you really have to focus on, though? You don't necessarily think this lifts all boats equally.
No, and that's a really good point, Becky, because it lifts some boats, but it certainly leaves others behind. And we look at both companies that benefit from AI and also others that are going to be disrupted by it. And I would say for the beneficiaries, we'll look for a couple of characteristics. For example, we look for proprietary data sets. Companies that have those, they can leverage those using artificial intelligence. The other characteristic we'll look for is how can we automate certain business processes, and how can companies build out certain agents? So that would be sort of the other way to approach artificial intelligence. And then there's this native AI-powered applications that maybe disrupt healthcare, maybe they disrupt financial services, but they build sort of a different approach to solving the same problem, but it is rooted in AI.
Anastasia, just very quickly, I know we never see the next one coming, never know exactly what's going to create the market sell-off. If you had anywhere you'd be kind of nervous or watching and anticipating, what would it be?
Yeah, I am nervous about the labor market. And, I think Fed Chair Powell started to talk about this risk that if the labor market unravels, it could do so quickly. And while we can point right now to some of the consumer data and say, well, it's strong and consumer is just fine, but if all of a sudden you do have more companies that are tightening their belts, and by the way, in the manufacturing survey yesterday, there was a really interesting phrase that said companies are getting pushback and they can't pass through some of those tariff-related cost increases anymore to the consumers. So if you couple that with the fact that consumers maybe don't have the confidence in the labor market, or there are outright job layoffs, that could unravel quickly. And if that's the case, we might actually be behind the curve in terms of rate cuts. So that's probably my biggest worry at the moment, not the base case.
October's next week, or coming.
Yes, it's coming.
We talked about how the labor market, and we talked about the unemployment rate going up to 4.3% in the month of August, and how the federal chair is expecting, he forecasted in the Fed meeting, that unemployment will go up to 4.5% by the end of this year. And what's key to that is the understanding that AI is going to impact the labor market and ultimately impact jobs in a significant way, right? We talked about how AI is taking people's jobs, right? If you work in certain industries, I mean, we know that when we answer the phone or when we call a customer service agent, that person might end up being out of a job because artificial intelligence is ultimately taking that position away from that person, right? So AI is, from a good standpoint, making the world a little different on a technology space, but also can impact in a negative way when it comes to jobs, right? So it's something that we need to take, a little bit more time and understand that in the near future, we could see over the next 12 to 24 months, artificial intelligence definitely, impacting the labor market in a negative way, right? So if you are currently working at a job and you need to be more efficient, I say use AI as much as you possibly can. And also, if you have children growing up currently right now and they're wondering, what should I do for a professional standpoint? Man, I say technology and math is key. And if you are thinking about doing a trade, definitely trades when it comes to plumbing, electrician, HVAC, and those type of trades will never ever go away, right? So those are secure trades moving forward in the next the next generation. And we know that actually we're about to, start talking about AI infrastructure. I mean, electricity, power, nuclear power, clean energy power, all of those things will become very important to where we are going. Natural gas is another one. It's going to become very important to where we're going when it comes to this country's infrastructure and AI as a whole, right? So now we're going to have a quick discussion on OpenAI, which is the company that basically created ChatGPT, right? And it is the most popular AI, application that most people are using nowadays, right? So there is uh, a partnership and an expansion that's happening in real time with OpenAI, Oracle, and SoftBank. And we're going to take a look at that because this is very important to our investment and how we're going to invest in our future. And currently, right now, OpenAI is a private company. But when that company goes public, I'm telling you right now, it is jumping on that investment as soon as you possibly can, right? So let's review OpenAI and the partnership that they're having with some companies and what does that ultimately look like for the future.
This is fascinating. I mean, as Mackenzie had mentioned, this comes on the heels of the NVIDIA OpenAI deal. And if you want to think about the circularity of yesterday's deal, then you loop in Oracle and OpenAI and Oracle teaming up, and it's sort of this big
takes you back to that announcement back at the White House, and that was, we saw those three stocks, or those that could trade, excuse me, were out there moving. And yes, there are linkages and there's overlap in terms of the ownership, and some of this, a lot of this goes back to Larry Ellison. And look, Oracle has done an amazing job transforming their business. And the question we ask constantly is it profitable business? And ultimately, but when you look at where they're going to be spending on data center relative to themselves, this CapEx is bigger than any of the hyperscalers who have announced so far. So no question, the right partners, no question, there is demand. The question is really, what's it worth?
OpenAI is spending a lot of, there's a lot of money being circulated. Yes. One has to wonder where it's going to come from, but shelve that for a second. Let's talk about Oracle, because they're being rewarded for this revenue, and maybe justifiably so, but we still don't know what the earnings are going to be. And if you just do back of the envelope on what expected earnings are, when you got Oracle trading close to 40 times next year's numbers, which is historic for Oracle. And, it's somewhat historic for the space in general, if you think about what's going on here. Now, they might earn their way into that, but that's a big leap to make from where it historically trades to where it's trading now.
God, we sound a little pessimistic here, because I'm just going to kind of jump on the thing here.
Wait a minute. Now
all
right,
so you asked the question.
Guy?
So it's the energy that you just asked about. It's the financing. Okay, so fine. These hyperscalers, they got a lot of cash. They generate a lot of cash. They can keep doing 25, 30% of the revenue until things just kind of stall out a little bit. But where does a company like Oracle that has $100 billion in debt and not a whole heck of a lot of cash, and really is going to have negative free cash flow for the beginning here to try to build this out? And so you think about this, Oracle is actually going to need NVIDIA to come in and take a stake so they can buy their chips, right? So when you think about the CapEx here for all of these build outs, about 50, 60% of it is NVIDIA GPUs, right? And so there's obviously crazy demand for them. We haven't even talked about XAI, right? And the demand and some of the things that they're talking about that they're building out. So who's going to finance all this? And so once you get away from the major hyperscalers, then you got to tap debt markets, and you got to tap, a whole sort of not just public debt, but private credit, that sort of thing. So at some point, this is going to become massively embedded into our economy if it hasn't already. I think there's some estimates that it's 50% of our GDP over the last year or so. So it will not take much of a hiccup to actually have reverberations throughout the economy, not just the tech economy. And this is one of the similarities. I think you can bring it back to 25 years ago. People thought it was very isolated to the internet and the spend and the fiber that was being laid. But the moment there was not the sort of demand that the build, right, was expecting, then you had a massive slowdown across the economy. Take that forward into 07, into 08, and I don't mean to draw too many lines together here, but the financialization of a whole host of things, the housing market, that led to this. So when you think about the interconnectivity, you think about the scale globally, but also all of these companies that are, listen, Oracle, they are attached at the hip with OpenAI. Microsoft to some degree is. So there's just a lot of interconnectivity here that I don't think the markets are pricing whatsoever.
Ahead of them in line, right? I mean, in other words, Microsoft personally has the first call on some of that capacity. And ultimately, this gets back to who is benefiting now and where is there really not only a revenue accretion, but where there's actually profitability that changes in the face of AI. A lot of this is CapEx with the built and the promise on tomorrow. And it gets back to that trade, right? And we've clearly seen the rotation on the build and the promise for tomorrow over the last 3 weeks. This has not been about the early players. The first round of this was clearly Meta, then Microsoft, and to some extent, some of the other hyperscalers.
So this is so important. Let's deep dive into this real quick, right? So let's take a second and discuss this deal, right? So we have an AI project called Stargate, right? This Stargate project is currently just begun, and it is in Abilene, Texas. All right, so we have an AI data center project between OpenAI, SoftBank, and Oracle. Right, so OpenAI is the company that owns ChatGPT. Right, SoftBank is ultimately the bank that is, financing the deal, and Oracle is helping building large AI models. Right, so it is a massive $500 billion AI infrastructure initiative backed by OpenAI, SoftBank, and Oracle. Right. It's being built in Abilene, Texas. Is basically a big, huge data center facility. The purpose of the deal is to build and provide the computing power needed to fuel OpenAI's large AI models. Right. So we're talking about ChatGPT right now. The campus will contain hundreds of thousands of advanced GPUs, making it one of the largest computing clusters in the world. Location is an 875-acre campus in Abilene, Texas. The construction began actually in 2024, right? The economic impact of this deal, right, is expected to create thousands of jobs, drive billions of dollars in investment, and help establish West Texas as a new technology hub. What's important in this situation is a couple things, right? So we got OpenAI with a deal with Oracle. We also have OpenAI with the deal with NVIDIA announced about 48 hours ago, which is a massive deal, right? We also know that OpenAI and Microsoft, right? This is what the gentleman was saying about Microsoft. Microsoft owns 48% of OpenAI with their early investment that they had into the company, right? So we have Microsoft owning a considerable ownership stake in the company. We also have this deal right here between OpenAI and Oracle. We have OpenAI's deal with NVIDIA. The names keep popping up. We keep hearing deals with companies and deals with CEOs and massive deals in technology. And we have to take notice of who is putting the deals together. And if you pay attention, all of those people was at Trump's dinner that we talked about a few weeks ago, right? All of these people are at Trump's dinner having conversations about how they are going to build the infrastructure, technology infrastructure of the United States when it comes to artificial intelligence, right? So when you ask me, who should you be invested in? Again, it is not as hard as you think. You just got to know the companies that's playing the game, that are making these investments, and ultimately it ain't that hard to choose. It's really between this conversation. We got Oracle, NVIDIA, Microsoft, and OpenAI is not publicly traded yet. When OpenAI does get it publicly traded, believe me, we invest in a ton of money into OpenAI, right? NVIDIA, OpenAI, Microsoft, Oracle. And when OpenAI becomes public, that's obviously a steal game changer when it comes to ChatGPT and artificial intelligence as a whole. Right. The next layer after the companies that are basically in charge of building out the infrastructure, it is the partnerships that the companies need to build out the data centers. Now, again, if you got a 873-acre data center, what is needed to run that data center? That is the conversation we're transitioning to. where we're moving away from NVIDIA conversations currently right now in OpenAI. We are moving to the who's going to win, who's going to make money, who is going to be needed to build out data centers and big infrastructure facilities over the next 5 to 10 years. Because when people ask, what's the next big player when it comes to artificial intelligence, I would argue it's the energy and the infrastructure and the cooling needed for AI. Because when you're building a facility, you're building a house, you're building a big, construction facility, what do you need? You need energy, you need electricity, you need power. And in these situations, when it comes to, data centers, you need cooling, because the computers, the data centers are very hot and they run all day long, 24 hours a day, 300 and, the all year round annually. They need power and cooling. So what companies provide the power? What companies provide the cooling? And it's actually a little concerning from the standpoint that we don't have enough electricity in the United States to power these data centers. We barely got enough electricity to power all of the houses and all of the homes we have within the United States, as we see different power outages happen across the United States. So this is a big deal that AI needs a ton of energy and a ton of power and infrastructure to stay afloat. So now we're going to take a second and we're going to review what type of power is needed for the data center specifically. And that is the next level discussion of what we need to be looking at and investing in when it comes to power in the United States and energy ultimately to help power data centers specifically.
NVIDIA announcing that it will invest $100 billion into OpenAI, and CEO Jensen Huang telling CNBC that project will use about 10 gigawatts of power. With the electric grid already near maxed out, some are starting to wonder where we're going to get all that new electricity. Fortunately, we've got someone on the case. Brian Sullivan joins us right now to help put it all in context. Hey, Brian, this is quite the problem to try and riddle.
It is, and I loved your reference to Back to the Future and the T's, because electricity is difficult to understand. You got kilowatts, megawatts, gigawatts, JJ watts, who knows? I'm going to try to put into some perspective about what exactly was announced yesterday, because when Sam Altman and Jensen Huang were with John Fort, they were making this announcement. It was awesome, and markets are moving. I thought, where is all this electricity going to come from? They're talking about 10 gigawatts. All right, so let's put that into perspective, shall we? Because a gigawatt is about, and again, electricity is squishy, guys. Different size homes, different locations. It's hot, it's cold, whatever. I'm going to be very, very general. A gigawatt is roughly 750,000 homes worth of power. 10 gigawatts, let's carry the one, it's about 7.5 million homes worth of electricity, or let's call it one entire New York City, all 5 boroughs worth of power, what they announced yesterday. So how do we make all that power? Again, using very squishy numbers. Here we go. The largest nuclear power plant in America is the new Vogtle plant down in Georgia. The 4 reactors combined make about 4.5 gigawatts of power. So you're talking about 2.5 Vogtles. By the way, those took decades and cost $36+ billion to build, or about 15 of the largest new natural gas plants you can build, or you can basically fill up an area the size of Rhode Island with 2,700 massive wind turbines.
Okay, so let's stop for a second. All right. So when we talk AI and we have the discussion about what is needed to power artificial intelligence, this is what we're talking about. 10 gigawatts of power is roughly what is needed to power OpenAI's power plan when it comes to the United States and artificial intelligence. Right. So he says over 7.5 million homes. That's how much power you need to power, artificial intelligence for what's to come over the next couple of years. Right. We don't have that power. That's impossible. And this is a big problem because you know, I'm a homeowner. I own multiple homes. We know that the electricity bill is what it is. But I would argue that this is going to then impact electricity bills going into people's homes, which is also going to impact how much we're paying for electricity, right, in our homes. But I want to switch back to the conversation of investment. We have to start thinking about investing in power and energy when it comes to AI infrastructure. That's the next conversation because AI is already here. Now we got $500 billion deals being made to build out power plants and data center power plants so that artificial intelligence can, you know, do what it needs to do on a daily basis across the United States of America. So what companies are going to do business with NVIDIA, with OpenAI, with Oracle, you know, with SoftBank and some of these companies to partner into creating energy and cooling for data centers specifically? That is the research that needs to happen. And I've been on ChatGPT. We've been rocking out trying to figure out, okay, we got this company that's providing energy, and that's a partner with NVIDIA right now to provide cooling for infrastructure for data centers. We got another company that's already partnering with Microsoft to build out nuclear power plant in different, and I think in one of the Carolinas to help with Microsoft's, you know, semiconductor and the power that's needed for Microsoft to continue to rock out in its way. And then you have another company that's partnering with Google. Again, you got to do your research on what companies is doing business and partnerships to be able to know what companies that you want to invest in over the next 5 to 10 years. Right. So this is the new wave that is going to be built out from the presidential and government standpoint, because this is going to have to be a presidential conversation. If the United States wants to run technology and be the player, the leader in the next generation, they will have to move infrastructure and put millions and billions and trillions of dollars into the infrastructure grid of this country, and what companies will benefit from that plan. Do the research, look it up, use AI, ChatGPT, Claude, Grok, whatever you want to use, Perplexity. Have the conversation and dialogue to figure out what companies that you want to invest in over the next 10 to 20 years that's going to help build out the infrastructure for artificial intelligence moving forward. That's what you got to do. And I already have 2, and I'm looking for a third player right now that we can really invest in. And I'm already investing in one, and I'm looking to get into a second one in the coming weeks. And I'm doing research to try to figure out who the third player is. And that's how I'm moving forward ultimately in our portfolio when it comes to AI infrastructure and energy specifically.
That's about the power output that we are talking about. Now, to be fair to OpenAI and NVIDIA guys, they are not saying this is going to be one location. They didn't even say where this could be. It could be a bunch of locations in America, in Europe, Australia. And as Diana Olick reported yesterday, maybe we make some of this power in outer space. True story. I'll leave that for her to explain a little bit more. So who does this benefit? Well, anybody that can produce excess power and sell it to a bidder, what they call the IPPs, independent power providers. This morning, Melius Research put out a note saying the IPPs, which are Vistra, Constellation. You got TeraWulf, of course. Of course,
Oklo, right? He giving you the playbook, right? And I'm not saying invest in all of these companies that he's talking about. I mean, one of them he said I'm invested in right now, but he's telling you who the AI players are that can benefit from AI infrastructure and how you need to look at investing long term.
The nuclear startup, NuScale, the nuclear startup. This is one reason that those stocks have done this. But guys, 10 gigawatts, you could have sent 8.5 Marty McFlys back home in that DeLorean. I'm not saying it won't happen, but let's be clear. These are massive numbers, and the capacity does not exist right now Not even close.
Hey, Brian, we had Tom Fanning on a little bit ago, the former Southern Company CEO, and he said part of what might be happening with this is you will get some of the old power systems that were supposed to be going offline by the end of this decade. That's maybe not going to happen. Some of the coal, the plants that use coal to produce that energy. You're going to have to speed up permitting time, probably in a big way, because it takes a long time to get permits for nuclear energy. Maybe 7 years is the average that this works on. And he brought up just the idea that, look, it's going to be hard to even get tradespeople who can perform all those jobs. Some of the troubles they have when they were trying to do the last plant they put together, from everything from the equipment, but especially the skilled labor, the welders and others who know how to put those things together.
They retire. I mean, he's exactly right. The labor is tough, and the longer these power plants are offline, it's not just you lose people. They're like, you know what? I'm 58 years old. I'm out. I'm not going to go back to work. But these things deteriorate. They're subject to the elements. They rust. They have problems. So let's talk about very quickly a few of them. Obviously, everybody knows about 3 Mile Island, now called the Crane Energy Center. At its max, that's about 1.7 gigawatts. That 3 Mile Island that we talked about so much because the 1971 scare, that was 1.7 gigawatts. You got Duane Arnold in Iowa. That's a little bit smaller. But right now, Becky, what, about an hour and a half, 2 hours north of where you guys are sitting right now, it's called Indian Point. It's a nuclear plant. It's about 2 gigawatts of power. It's been shut down for a couple of years. A company called Holtec out of Florida is trying to get that thing rerunning again. That's 2 gigawatts. That's a lot. But to your point, you run out of people. You run out of just stuff, right? I mean, we don't have something open for a couple of years. Try to reopen a gas station after a couple of years, much less a nuclear power plant. I'm not saying this deal will not happen. I want to be clear. Jensen Huang, Sam Altman, everybody else, far smarter, far richer than I'll ever be. But I just want the viewers to understand that, as Melia said this morning, power is the secret sauce to making all this work. No power, none of these plans, which are moving markets, help. By the way, EQT got its stock price raised to 63 by Citigroup this morning.
So it's important for us to take a second and do some research, because this is going to be very important for the next innings when it comes to artificial intelligence, right? It's not just about having companies that want to put billions of dollars into them and do business and do partnerships to build out data centers and build out different things within the country. It's about the next layer. How do they do it? Right? What partnerships do they need to build out the facility? You know, what companies are going to then benefit from those facilities? That is the conversation and the thought process and the mindset that we got to have as investors moving forward in this era of technology and artificial intelligence. And quantum is not even, we haven't even started talking about quantum computing right now. Like, we moving into, like, you know, you see those movies in the future and you see some of the things that be going on. Like, we got the whole movie Tron coming out, and that thing looked futuristic like crazy. You got AI, you know, soldiers and stuff like that. I mean, listen, we moving in that direction. A lot of times movies is just telling you what's about to happen in the next 20 years, right? So right now, as investors right now, I am telling you to look at energy infrastructure and power and how that is going to impact AI and how much you can benefit if you become an early investor into an amazing company that's doing partnerships and deals with some of these mega companies that's building out AI long term, right? So we are transitioning into our last topic, which we're going to deep dive into Netflix right now. Amazing company. If you don't have a subscription to Netflix, I mean, most people do, but if you don't, I think you're missing out. Netflix is taking over. They just had the boxing fight of the century between Canelo and Bud Crawford. Bud Crawford did win, ultimately undisputed champ, right? Amazing fight for him. But you see now Netflix is turning into live events. Now they're taking over possible sports. And, you know, we know that, you know, football, I believe it was a football that was on Netflix this past year. You know, I know they got wrestling now, and they're just continuing to do big things, right? So we're going to take a look into Netflix. Their share price is currently, let's look at what Netflix share price is right now. Netflix share price is at $1,202, $1,200.02. It is a little expensive, but it is definitely a stock that we're looking at for the portfolio. I was invested about a year or two ago into Netflix when it was down. It was about $700 a share. We got it all the way up to about, I think, 13, and then we sold. So right now, you know, if Netflix comes down a little bit, I'll be interested in taking a look at it. But let's take a deep dive look into Netflix and see what they got going on.
An upside from here. Joining us this afternoon, Mark Mahaney, Evercore ISS head of internet research. Mark, good to see you again. On Netflix, I know you've done some survey work. You've got some stuff to talk about sentiment. Does it deserve to have treaded water really since Memorial Day or so?
Oh, well, it's a good take on it. I was looking at the stock that's up 36% year to date and kind of patting myself on the back. But you're right. The stock has, there was an anticipation in the trade year to date that we were going to have a heck of a strong content slate in the back half of the year. I think that's coming through. And I think there's a little bit of surprise in this drama that everybody's now loved, and it's the most popular movie, I guess, of all time, K-pop Demon Hunters. But you still have, Carl, don't forget, you still got Stranger Things, and it's coming out in 3 batches. So this is going to keep you busy. Thanksgiving, Christmas, and New Year's. And then I think the content slate will just continue to get stronger. I think the next move in the stock is going to be based on them ramping up advertising revenue. I think they're going to do it, but this is going to be a long slog. And then also getting more and more into live events, including sports. And I think we're going to see that. I think Netflix is just going to become more crucial, more essential to households around the world over the next 2 to 3 years. It's a really good asset. You want to be long it. This is not an aggressive entry point, but if you don't own any, you should buy some, I think, and look for those big pullbacks to step in and take big positions. I like Netflix as a core franchise.
I know you've looked at satisfaction, at least in terms of U.S. fundamental trends. But you did get some pricing action today on Disney Plus, which was reported by The Verge. Would you expect churn to pick up overall among the streamers right now?
I don't see any particular reason why it does. Look, you're going to get these shoot ups in churn when you have price increases. And all these companies are going to be taking price up over time because they offer you really compelling value propositions. I mean, if you just step back, you're doing $8 a month for Netflix on the cheapest version of the offering. For $19 billion worth of content, you can spend $8 a month to get that. I mean, the value proposition is still truly compelling. I think they'll also accordion their prices at the high end. They'll take up more and more. They'll take up pricing consistently over time. They've been able to do it in the past. As long as they have that catch-all, that safety net of that low-priced offering, I think they can do that. I think that was the really important pivot by the company 2 or 3 years ago. It's been phenomenally successful. I expect with that, with those price increases, you'll get a little spikes in churn, but I think long term they'll still stick there because the best value proposition for your money, for your entertainment dollars, is in streaming, whether that's Disney or Netflix, and you'll probably buy a couple of these services. I think these companies have staying power and they have pricing power.
While I have you, Mark, I want to get you on some of your other favorites in the space, including any hyperscalers. I know you've done some work looking at not ROI, but ROAI, meaning the return on AI investment by a lot of the giants. And you argue that it is accretive.
Well, look, there's this great debate in the market. There was this MIT study that came out a month ago that said 95% of corporations were probably wasting their money on AI. I don't know if that's true or not. I look at the hyperscalers. I look at 4 companies that have leaned in more heavily than anybody else into AI spend. And you know how it's paid off? They've gotten accelerating revenue per employee. In other words, if you look at the last couple of years when they've really leaned into this Gen AI investment spending, CapEx has gone up aggressively. Their revenue per employee has gone up 30% over the last 3 years. Now, there's a lot of factors that are in there. I know that. But still, I'm sure that some of the innovations they've made, I think about names like Meta that have dramatically improved the user experience and the advertiser experience, and has caused revenue per employee to jump up, in their case, almost 70%. Like, if you do AI right, if you invest in it aggressively, you can materially improve your monetization. And I'm not talking about cost. I'm talking about improving your productivity, your revenue per employee. You don't normally see that So I think that's why it's just great case studies for why this is such an exceptional period for these companies to be investing, and they're investing successfully, and investors can take advantage of that and stick with these stocks, because I think these trends are going to be in place for several more years.
This is a fast.
So right now, I believe that Netflix is the only, and I mean only, company that I would invest in when it comes to media specifically, right? I know you got Disney, and Disney is way more than just a media company. I mean, they got the parks and they got ESPN and things like that, but I wouldn't invest in Disney at all, honestly. And you have Paramount, things like that. But I believe that Netflix is an amazing company, right? It's probably the only media company outside of, you can argue Google, because of YouTube is in that space a little bit. That's not its core business, but it is definitely part of their business. So Google, I'll say Google and Netflix obviously are definitely good investments. If Netflix price comes down to about 11, anywhere in 1100, and it's sitting around the 1203 mark right now. But if it were to come down a little bit, definitely would be interested to buy into Netflix. Trying to see where it's currently at. It hit 1173 about a couple days ago. But if it can go around that 1150 mark, or even close to that 1100 mark, would definitely buy into Netflix for sure. So today we had a packed show. We talked about Bitcoin. We talked about how crypto was being adopted within the hedge fund space, as well as the investor and equity side of things when it comes to buying Bitcoin and buying Ethereum and things like that, right? So if you currently are not invested into Bitcoin, definitely take a look at it and see if there's something that you want to add to your portfolio. We talked about AI infrastructure, the build out of AI infrastructure, and how it's important now to take a look at companies that's going to help build out infrastructure with energy, power, electricity, and nuclear power and things like that. So do some research to ensure that you are, starting to invest in some of these power companies, these energy companies that's going to help build out artificial intelligence long term. And, if you can get in early, then you can see a rise in your portfolio when it comes to your energy plays over the next 5 to 10 years. It's definitely going to be something that you're going to benefit from. And then last but not least, we had a discussion about Netflix, how Netflix is a great company. It definitely is a stronghold in the United States, and it ultimately has international, benefits also when it comes to movies and shows. We also understand that Netflix is getting into live sports, right? We've seen the Canelo and Bud Crawford fight over about a week or two ago. We understand that they are getting into boxing and also wrestling and things like that, and then they're going to slowly but surely get into sports when it comes to football, basketball, and other sports like that. So Netflix is a great investment. Getting at a good price. Definitely take a look at it. This concludes, right, stock market news this week, right? Stock Market Live on Financial Blueprint. This is Antoine Smalls. Check out the videos that I've been putting out, some of the playlists that I've been putting out. Wealth, money, and riches is definitely something to tap into. I'm going to continue to put out new videos, continue to support the channel. I love y'all. I appreciate y'all. I'm out. Antoine Smalls, Financial Blueprint. Peace.